Okay, good afternoon, everyone. Thank you so much for taking the time and spending it with us on this beautiful Tuesday afternoon on the Levinson Weekly Webinar Training Series. It's IUL Week here at the Levinson home office, and we don't take that lightly, okay? Number one, IUL is a huge part of the life insurance landscape and huge part of our total premium placed every year. So we go out literally and handpick the top products, carriers that you can bring to your clients and show, number one, competitive interest rates, number two, living benefits, right? The new kind of life insurance that pays while you're still alive, right? And we need to bring you great carriers that are A+ rated or better. Okay, that's the name of the game. And we have handpicked our top core IMO carriers, and you're listening to one of the top today. We have Ameritas. Lance is joining us. And the reason why we invited Ameritas to join today's presentation, number one, there's been a lot of talk, right, about AG 49, IUL, current interest rates, what are the illustration changes, what's going to happen to the space. So we're going to answer a lot of those questions today. And not only are we going to answer those questions, we're going to show you an unbelievable product, okay? You talk about living benefits, 18 triggers for living benefits, okay? That is a first in our industry with a 225% participation rate, uncapped. So you're going to hear about some really cool stuff you have not heard before unless you were on another one of Lance's presentations. But I promise you're going to love what you're about to see. Plus, we have some great sales ideas, sales strategies, okay, built around the pandemic and, you know, selling over the phone, selling online, which is what we're all forced to do. And then we're also going to show you some of the new tools and technology that we have put together for you to start marketing these products this afternoon, literally. We even have a custom video that we put together, right, that you can market on social media, or if you're using our CRM tool or your own constant contact version. But this is like a 3-minute video that basically tells the prospect, hey, don't get stuck with the old life insurance. Come into the new life insurance world that pays while you're still alive by using living benefits and triggers and what does it mean and how does it work, right? We explain everything from A to Z in a few minutes, and at the end we tee up your name, your picture, your phone number, your website, and email address, okay? So that's free, by the way. If you're active with us, okay, you send us your picture logo, we will custom make the video for you and send it out within 3 to 5 days. Doesn't cost you a penny. So we put together all of this unique stuff for you, but you have to put your foot on the gas, right, and press down and make it happen, right? So we can only do so much. It's our job to give you the best sales ideas, strategies, products, carriers, technology, and then obviously you take it from that point moving forward. We even have lead programs that will tee up an IUL sale. So some great stuff. And I'm also going to say, if you're a veteran in the IUL space, okay, you're going to learn something new that you didn't think existed until now. If you're a rookie, let's say maybe you always focused on term sales or mortgage protection or final expense, and you really never felt comfortable pivoting towards an IUL sale, okay? By the time we're done today in about an hour, you're going to be comfortable, okay? And it's always know enough to be dangerous, okay? And remember too, very important point, these cases aren't the typical 20, 30, 40 bucks, okay? These are on average $15,000 to $25,000 of target premium, okay? And commissions with Ameritas, because we have a direct IMO contract, one of the few IMOs that do, commissions are awesome, okay? In fact, one of the highest that I've seen on any IUL product, okay? So you will be very, very happy to hear what we're about to say during this next, 45, 50 minutes. We're also going to do the question of the day, okay? We're going to ask you a question when we wrap up at the end. Whoever answers first incorrectly, like we do every week, will win your choice, Amazon Echo or Amazon Fire Tablet, and you get the new IUL prospecting book on us. One little caveat, you must be appointed with Levinson through Ameritas. Okay. And if you're with another IMO, no problem. Okay. We'll move you over to us. And I hope you're writing this down. And you get free leads or cash with your first application. And we beat your existing commission grid. 90% of the time we beat it, 10% of the time we match it. But worst case scenario, we match, you get the free cash or leads, and everyone wins. And most important, you get to take advantage of all of our technology tools and, of course, lead program. Okay, so lots and lots of value add today. Let's jump right in, Joe. We have some new opportunities here at Levinson we're very, very excited about. Okay, if you know me, and I know most of you do, my dream has been Insure Me Now Direct, okay, for many, many, many years, which is Amazon for life insurance. Okay, so 7 years ago, technology was not where it is today, right? Compliance and underwriting with insurance carriers wasn't even close to where it is today. So we had one decreasing term product. Today we have 5 different carriers on the platform that's 100% direct to consumer. So your client goes on your site 3 a.m., runs a quote, applies online, gets approved, and prints their policy in less than 10 minutes. You wake up and you have a new policy in force with a commission check that's in the mail. Okay, you can do this through webinars, e-blasting, associations, banks, financial institutions, health insurance agencies, mortgage companies, real estate. I mean, the list goes on and on and on, but you have your own site. We co-brand it for you. There's no charge for any of this. Okay, here's the kicker. Okay, now we're working on this today. We already have the contract in place. In fact, if you want to get up and running today, we can do that. But this new product is going to be on the Insure Me Now Direct platform in about 6 to 8 weeks. Here's what's so cool, okay? And jot this down. So term up to $1.5 million for your clients, okay, with an instant decision, okay? Instant decision, and it's 100% direct to consumer, okay? Now, there's a bunch of our competitors right now that are trying to market something similar, and they're saying, oh yeah, you know, we have this direct-to-consumer drop ticket, or we have a call center, a fulfillment center that will do all the work for you, okay? That's a big red flag, and here's why. And it's very simple if you just get your arms around this concept for a minute, okay? And if I was I have my agent hat on, right? I'm an agent out there in the field, okay? And the question is that you say to Levinson or to any other IMO, okay, so what you're saying is my client can go on my website while I'm sleeping, they can run a quote, they can apply for the product, they can get an instant decision, and they can print and save their policy to their computer in less than 10 minutes while I'm sleeping from A to Z with me not involved, okay? Can you do that? That's the $1 million question, okay? And the answer to that is no. They're going to tell you, oh, yeah, no, you can do it, but we have our call center operator that jumps on the phone with your client after we receive the ticket, okay? Some third-party company overseas is talking to your client, and you're giving up, in some cases, half the commission, which is absurd. And what else I'm hearing, you're not even getting a commission. It's a referral fee, okay? Icing on the cake, you're not even the agent of record. You're building a book for another agency or company. That's absurd. These are your clients. It's your website. That's your landscape, right? Think about this. It's your real estate. It's crazy. So anyway, the point is, and I know I'm getting a little excited here, but some of these stories that I hear would make your mind spin, okay? And I'm not joking or being sarcastic. So anyway, with us, everything is 100% direct to consumer. And here's the cool part, 1.5 million of term, instant decision, everything less than 10 minutes, A+ rated carrier. And you say to yourself, well, commissions must be reduced, right? Or premiums must be so high, right, that the policy won't even make it a year. And the answer to that is no and no. Commissions are awesome, number one, okay? Higher than you've seen before, okay? Number two, premiums are as competitive as a fully underwritten term product with a traditional carrier. So you say to yourself, well, Bill, I don't see where the gray is. Where's the small print? There is no small print. This has never been done before. In 49 states, we are ready to go. And like I said, we can set up your portal today, but Insure Me Now Direct will have everything implemented in 6 to 8 weeks. So we're very, very excited about this, and you can see just why. Plus, we have our new final expense product that's on the same platform. Okay, works just like this. So anyway, I'm so excited about this because this is the future. I mean, this is it. The younger generation, this is how they want to do business. And if you say to me, Bill, I've been doing the same thing for 42 years and my clients call me and they'll only deal with me. Okay, that sounds great. And I'm sure it's true. But what happens when that client that you've had a 42-year relationship with refers their children or their grandchildren, right? And they say, well, how do I know who Bill Levinson is? He's not on Facebook or Google, my Google search, right? He's not on Instagram. How do I even know this guy's a real insurance agent? I'm just going to take your word, okay? They want to go online. They want to do a search. They want to log into your website at their convenience at 2 a.m. or 11 p.m. They don't want to wait for you and talk to some guy or girl for an hour about life insurance. No, they know what they want. They just need a place to sign up, save their policy, and they want to move on with the rest of their life. That's how the younger generation works. Everything is quick now. There's no patience anymore. I'm not saying I agree with it, but I'm just saying those are the facts, like it or not. So we, as insurance agents, have to provide the platforms that they're comfortable using, right? Or else we're going to lose the business to someone else. So anyway, that's why we invested heavily into Insure Me Now Direct. And with these new products, this is a game changer. And I'll tell you, during the last, 15, 16 months during the pandemic, our numbers are up by 5 to 7 times what they were pre-COVID. Okay. And again, it just tells you the proof is in the pudding and it's not changing. Okay. If you think, this pandemic's going to be over soon, hopefully it will be. Okay. Of course, I would love that. But things are not going to go back to the way they were, where you're sitting at kitchen tables on a Wednesday night. Okay. If things are going to be done over the phone through GoToWebinars and emails and e-sign and drop tickets and e-apps. And this is the proof in the pudding. Look at what the carriers have done in the last 16, 17 months. Okay, Lance is from a home office, and I'm sure he will agree because I've seen what their company is doing. But let's take a 20-year window. Look at the life insurance space. In the last 20 years, look at how life insurance companies have evolved. Okay, now look at the last 16, 17 months and look at how life insurance companies evolved. They have changed more technology-wise and underwriting-wise in the last 16 months than they have the entire 20 years combined because they know they don't have a choice. Okay, either you change or you get swallowed. You're done. So they changed. In fact, I don't know of a company anymore that makes you see your client face-to-face. 2 years ago, probably 20% of the companies said you still have to see your client face-to-face. So anyway, like it or not, things are changing. You must change to be successful. Let's move on. Episode 29 of the Bill Levinson Experience. This is TED Talks infamous speaker, Don Wilson. He's also the author of What's Your Whoopee? Great book. Talks about anchors and positivity. So he actually interviewed me for an hour. It was pretty cool because usually I'm on the other side of the table. So this was a good one. I think it came out great. I hope you all agree. I want you to check it out. If you leave me a comment, I'll send you that IUL prospecting book on us. Okay, it doesn't have to be a great comment, but I want to know honesty. I want honest thoughts because this is how I create next month's episode, okay, based on your feedback. All right, check that one out. Let's move forward here. We're going to jump into our feature presentation. We have some awesome bullets here, a very cool and innovative BNP index that Lance is going to touch on. Without further ado, I want to introduce my friend from Ameritas, Mr. Lance Larson. Lance, you there?
I sure am, Bill. Thank you so much.
Yep, thank you.
All right, I'm going to get my screen up here.
Yeah, take your time.
All right. Can everybody see my screen?
Yep.
Wonderful. Well, Bill, thank you so much. And before I jump in, you're absolutely right in regards to technology. I can only speak about my own company that I work for, but I think about even, I've been doing this for 25 years. I've been a home office guy for most of that time. And, sometimes our industry moves at a snail's pace in regards to technology. And the last 18 months, we've seen so much change in regards to what we'll accept from an underwriting standpoint, technology standpoint. The purse strings have been loosened and opened. We're spending a ton of money to upgrade our systems. We're never going back to the way it was, to your point, Bill. So, and I think that's a good thing for all of us to make this a simpler transaction for consumers. They expect that, and we have to deliver that as an industry. So, very good stuff. In my time with everybody today, and thank you so much for the opportunity, Bill, and everybody for joining. I wanted to talk a little bit about the income story and IULs. It's IUL week at Levinson, and I wanted to talk about IULs and really changing the story. Some of you have sold IULs in the past. Some of you have not, as Bill mentioned. One thing that I really had to take a hard look on is, we talk about features and benefits all the time with these products, but we really need to make sure we're having the right conversations with our consumers, our clients. I think about my siblings, I think about my friends, my family, and frankly, there was a lot going on last year, right? I mean, that's kind of I'm telling you a dad joke there on the slide. Did anything exciting happen in 2020? I think maybe the better question is, what the heck didn't happen in 2020, right? I mean, my goodness, even the murder hornets, you got these weird like bees running around, destroying everything. I mean, what else could go wrong in 2020? And we had to make a lot of changes, and we mentioned that, and but one thing. And you may have heard this too, is when COVID really kind of got, really, really on fire in March, April of last year, about 12 months ago, right? I started to hear from a lot of talking heads in our industry that, oh man, Google searches, they're up 8,000 trillion% for life insurance, and everybody is now going to start buying life insurance, and because they're thinking about their morbidity, their mortality. And so, one thing I wanted to do is at the end of last year, I wanted to really dig into that a little bit and see, was that simply the case? I mean, was that the reality that we saw? And, and again, this is just a slide with a bunch of jiggly lines on it. But, the short answer for all of you is, yes, there was a blip. There was a blip of the search term life insurance right when COVID was hitting. It reached a peak January to early March of 2020, but then it fell back down to pre-COVID levels. And really what I guess I'm driving at there is, there was maybe a very short-term, hey, I need to buy some life insurance. But at the end of the day, that dissipated pretty quickly. Another a LIMRA study actually was talking, surveying people about consumer interest in life insurance. And frankly, as you can see on the slide, it really was unaffected by this pandemic that we experienced. The number of the consumers considering a life policy was still hovering around 40%. 70% of people's perceptions of their current life provider remained unchanged. In fact, the quote that this LIMRA study had that I felt really, and it goes back to what Bill was saying about technology and kind of changing how we do business, is the main reasons customers avoid life insurance is people think it's unaffordable, and also the complexity of the application process. So, it really still, at the end of the day, and we've all heard this saying, right? Life insurance is sold. It's not bought. Now, we all love this business. We live and breathe it every day, right? But think about your siblings, your spouse, your neighbors. None of them wake up in the morning thinking, you know what, today's the day I'm going to talk to Bill and Lance about getting more life insurance. Nobody does that, right? I know some of you are probably smiling right now because we know that's true. We have to sell that to them. They're not going to reach out to us to buy it. Some of you remember these pictures. You know, the gentleman with President Clinton there, his name's James Carville. And James Carville, for some of you that might remember, he was Bill's campaign manager, back in the early 90s. And, when they were running his campaign, President Clinton's campaign, there was a lot of people saying, we need to talk about this. We need to talk about this topic, the Middle East or this or that. And frankly, James, it's a very, some of you already know this, a famous story that he just started putting up signs all over the offices saying, it's the economy, stupid. And what he was trying to convey there to all of the volunteers and the paid individuals with the Clinton campaign is that we need to focus on one message. We need to focus on the economy. That's how we're going to win this presidential campaign. And ultimately, we know as they say, the rest is history. They focused on that messaging of saying that's what we're going to change if you vote for our candidate. And they did a wonderful job. The other picture I put on there, some of you know that's James Carville's wife. I think her name's Marlene Matlin, if I'm not mistaken. I might have that incorrect. But I find it interesting is that she is a staunch Republican. Of course, James is a staunch Democrat liberal. And, if they can be married and stay happily married, maybe there's help for all of us, right? It's been a tough 18 months and a lot of division in our country. But if these two can stay married, even they have different ideologies, maybe there's help for all of us or hope for all of us. I don't want to call anybody stupid on this webinar today. So I'm going to call you people, but I'm going to take a page out of James Carville's book, and it doesn't matter what side of the political aisle you fall on. We can all get behind saying, it's about the income, people. What do I mean by that? Well, what I mean is, and by the way, that is not Barack Obama. That is a cheap knockoff. I think, Bill, you may have been at that DC convention with that other other carrier, but yeah, we had a fake president walking around. We need to change the discussion. Nobody wants to think about dying. Nobody wants to talk about death. Everybody thinks they're healthy. We all have heard that joke. This client just told me they're happy as they set their cigarette down in the ashtray next to their oxygen tank, right? It is what it is. And we do need to change the conversation to really talk about income, because frankly, I've never, in my 25 years in this business, no one has ever told me they're making too much money, right? No one is worried about having too much income. It's just the opposite. People know that they're going to need more income to replace if and when they are able to retire. Where is that additional income going to come from? So people are going to be more open or apt to be able to have a conversation about these types of products if the topic, the main positioning is replacing income versus, hey, when you die, we're going to send your spouse some money. That is just not going to fly in most cases. So what are the concerns with a lot of consumers? And these are the 5 bullets that continue to come up when we survey individuals, consumers in the United States, about what are their concerns about replacing income. As you can see on the screen, not having enough money to retire well, and I'm going to touch upon that in just a second. And these are the usual ones. We've all heard these, right? This is nothing new. You've heard all these. Healthcare costs, paying too much taxes. What's the uncertainty? Are we going to pay more taxes in the future? Or are we going to pay less? Market volatility, inflation. We've been pretty lucky, right? Last 20 years, inflation has been pretty stagnant, pretty low. We've been very lucky. But, that's not to say that it can't start spiking up. In the spirit of time, and I've done a 3-part series, and I have this recorded that I can send to you of the full boat of this, but I'm giving you the abbreviated version. But I wanted to just talk briefly about the retiring well piece. And to me, and I hope you agree, there's really 2 views, right? There's a perception and there's a reality. When we survey individuals, when we say, do you want to live longer than the current life expectancy? And of course, these fluctuate, right, depending upon who you look at, what actuarial table you look at. But, what I've seen on average is about 77 years old for a male, 81 years old for a female. So when we were surveying individuals saying, hey, you're a male, Lance, would you like to live longer than your life expectancy is age 77? About 63% said, yeah, I'd like to live longer. Another, 20 some percent said, I'd like to, 77 seems to be the right amount. There were some that said, yeah, I don't want to live that long. There's that too. And that's good. But, what really, and we were obviously setting them up with that information, because the next question we pose is, are you feeling confident or, somewhat or very confident about your ability to have a comfortable lifestyle in retirement? And as you can see, the majority of individuals say, yeah, I'm feeling pretty comfortable, right? But that's the perception. And then, let's move to reality. And we see this, right? I mean, if that first picture, that's Walmart. You walk into Walmart and there's individuals that are more mature. I'm not going to say old, but mature, that are still in the workforce. There's more people today in the U.S. history than ever before over 65 still in the workforce. Now more than ever, there's people 65 and older that have mortgages. There's now more than ever people that are 65 and older are having trouble making ends meet. We're seeing more and more people that can't retire. They feel like, going back to that slide, they feel the perception is they're going to be in an RV, they're going to be going to Egypt and riding camels. But the bottom line is, do they really understand how much money they're really going to need just to make ends meet as they live into those retirement years? The total average retirement savings, as you can see on the slide for a baby boomer, $144,000. I mean, that is not lighting the world on fire, right? 65-year-old households, they spend an average of 45 grand a year or $3,800 a month. I'm from Iowa and I'm no math guy, but if I take 144,000 and I divide it by 45,000, I don't think that lasts very long, right? I mean, it really comes down to people that think they're going to have money to have a good retirement or retire well. Maybe the reality is something much different. There's actually a group that I worked with years ago. And some of you are familiar with this group, but they have what they call a stake, and it's not theirs. There's no original ideas in this business, but they would have an annual event called Steak and Beans. And their best producers would get to sit up front. They'd have surf and turf. They'd receive all the great awards. The people that did not have a stellar year production-wise, they would sit in the back of the room and they would be served beanie weenies. Now, look, it was all out of fun, right? It was a good time. It was a little bit of egg people on to try to perform better. But really, I think that really does kind of match what I'm really referring to today in talking about retiring well. Are you going to be eating steak or beans in retirement? If you're talking about somebody surviving on, $2,200 a month, about $26,000 a year, that is not a lot of money, right? I mean, even if somebody has $200,000 at the end of the journey, let's say at age 65, from their 401k, even if we just do a 4% withdrawal rate, as you can see, that's not a lot of money. The average Social Security benefit is only about $1,500 and change. We are not talking about a lot of income to be able to live for the foreseeable future. One, that $200,000 is probably going to be depleted. The Social Security probably will be there for somebody that's starting it pretty soon. But at the end of the day, if you're spending $3,800 on average a month in the average 65 plus household, we're going to need more income. I didn't even talk about taxation. I didn't talk about the longevity risk or the what ifs, right? When we talk about living benefits, when the what ifs become what now, chronic illnesses, the heart attack, you fall down, you break something. I mean, there's a lot of things that could go wrong that you would have to spend more money on from a health insurance standpoint. So, there's the doom and gloom, right? And frankly, all of you, you've heard this several times before. This is not new information, but I do think where you can benefit if you haven't sold IULs yet, or if you have, is the conversation being changed or replacing income. Because frankly, at the end of the day, there are some potential income streams that we all know of, but are they going to get us just by themselves to the end of the journey where we can have steak versus beans? Social Security, we'll talk about that in just a second. I mean, that's the most prevalent one. Defined benefit plans, pension plans, those are dinosaurs, right? Fortune 500 companies, there was, most of them had one 25 years ago. A trace of the Fortune 500 companies, less than 20, have active pension plans today. So the pension plan, defined benefit plan, kind of has gone the way of the dodo bird. 401ks, of course, they are very prevalent, but as I mentioned, the average balance is, depending upon the age, it can be very small, $150,000, $200,000. So, there are potential income streams. And frankly, if somebody has any of these, that's not a bad plan, right? Nobody wants to be told they have a bad plan. I would say, and I stole this from somebody like yourself, maybe I bought it, maybe I bought them lunch, so I rented it. But it's not that your plan is wrong, it's incomplete. And I want to show you how we can complete your plan with a new product, another solution. Social Security, some of you have heard this several times, but I do find this interesting. You think about when Social Security was developed, back in, the 40s, they were assuming that somebody was going to live for 14 years. And as we all know, medical technology, et cetera, the expectation is now is it's, somebody 65 is going to live, 20 plus years. The number of Americans that were 65 and older, today is 65 million. Just in a short time, 2035, that's, as we all know, that's right around the corner. 78 million. It's the graying of America. We've all heard the, people turning 65. It's like, what is it, 10,000 a day for the next 19 years, something like that. Also, we've got 2.8 workers for each person receiving Social Security benefits. That's going to lower to 2.3 workers. That doesn't seem like a lot, right? But that is a really big deal. So you've got more and more people going on Social Security. You've got less people paying into it. We've all heard this story, right? I'm preaching to the choir. But Social Security is not going to be the same thing 20, 30, 40 years from now. There's already a ton of benefits going out. I mentioned this earlier, $1,500 and change is the average benefit for a retired worker. What I find very, very concerning on the slide here, 50% of married couples, 70% of unmarried couples, it's half of their income. Social Security is half of their income. For 45%, if you go to that last bullet, almost half of unmarried people, Social Security is 90% or more of their income each year. You show that to a younger person, I hope that freaks them out, right? Now is the time to talk about income replacement. Not, as we all know, not the time to procrastinate. It's time to start now. And, when we talk about different solutions, 401ks, defined contribution plans, the Social Security, assets under management, none of those things are bad, right? Absolutely not. Frankly, I have a number of those myself, and so do you. But I do think the plan is incomplete if we don't have one more solution added to that. And I think it is Index Universal Life Insurance. And, I mentioned this earlier. Think about your neighbors, your siblings, even your spouse to some degree. When you mention the phrase life insurance, what do you think the first thing is that comes to mind for those individuals that don't live it and breathe it and feel as passionate as we do about it? Well, I always like to think about this. If you're not familiar with these graphics, this is from Bill Murray's movie Groundhog Day. Bill Murray's one of my favorite actors. This is one of my favorite movies. He keeps reliving the same day over and over. I'm laughing about just thinking about it. The guy in the picture is Ned Ryerson. And some of you, if you've seen that movie, he is your stereotypical, makes us all look bad, right? He's your stereotypical movie insurance salesman where he's very nerdy and he's trying to sell Bill Murray 14 different policies. Unfortunately, as some of you and hopefully all of you know, that's kind of the unfortunately the bad rap we get, right? You know, everybody's like, oh my gosh, insurance, I don't need that. That's again why I think we need to change the conversation. It's not about dying, it's about living. It's about replacing income. It's about having steak versus beans at the end of the journey. It's about retiring well, being able to do some of those fun things and not having to go to a job when you're 67, 68, 70 years old. You've earned the ability to have a true retirement. You know, I've got 4 kids, and I'm saying this luckily. My wife's not here to spank me, but luckily my oldest one is a freshman in high school. So, you know, I'm getting to that end of the journey myself. I can have my weekends back. But when my kids were younger, you know, I was that dad that was coaching basketball, you know, trying to be a volunteer coach. And basketball was always one of my favorite sports. And, you know, we always would teach the kids the triple threat. And some of you played basketball, you know, there's a picture of Steph Curry on the graphic there. The triple threat is when you catch the basketball and you can do 3 things, right? You can keep that defender off balance because you can shoot it, you can pass it, or you can drive, right? You can dribble. So that triple threat was always so important because you had options, right? Options are always good. Well, I like to take that same concept with the IUL. To me, that IUL is a triple threat. Of course, it's for protection. Life insurance is for protection. I will never be embarrassed by that, right? We all have those stories of this type of product coming through for a family. So it is for protection, not just about dying, but as Bill mentioned, with these living benefits, it's also for living when something bad happens, when those what ifs become what now. And last but not least, you know, of course, accumulation, but also I'm harping on it, the income. We are allowed to have the ability to grow tax deferred and ultimately get money out of these vehicles tax free via those cash value loans. So to me, having the IUL in somebody's plan is that triple threat. We've got immediate protection. You know, something bad happens to a young person, we've got a lot more money than they put into it, right? They can start putting in $500 a month into a mutual fund or a 401k. But if something bad happens and they need money, they only have what they put in. With a life insurance product, as we know with living benefits, we're going to have more than what we put in available to us. So it's so important to have that protection, accumulation, and income piece. Sometimes we use the phrase, does it check all the boxes? And I do think IULs do check all the boxes. You know, and I'm not just talking about Ameritas. There's a lot of good carriers, a lot of good products out there. But frankly, you talk about not having enough money to retire well. This is a vehicle that allows to set it, forget it. Of course, we want to do annual reviews, make sure that we all both feel good about what's going on. But really, at the end of the day, we're just taking that money, let's say monthly, out of that person's checking savings account, and they're not worried about it. It just accumulates. It grows. They see a statement once a year, like, wow, this is nice. Rising healthcare costs. We have the ability to have living benefits, to have the ability to keep up with inflation. You know, talking about taxes. You know, what if they do raise taxes a trillion% in 30 years? Well, guess what? As long as they don't mess around with the life insurance in 7702, we are fine, right? We can use those tax-free cash value loans. We can circumvent that, right? So that really does overcome the uncertainty of paying. You know, I always get these people like, well, I've got $1 million 401k right now. Hey, that's great. Traditional 401k. Do you realize about 35-40% of that is Uncle Sam's and your state government, right? Of course, they wrinkle up their nose and they don't understand that. You know, a 401k statement is about as helpful as an illustration of an IUL, right? It's just a piece of paper. You know, until you sell, you know, and pay the piper, you really don't know how much money you've got in those things. Overcoming market volatility. Zero is your hero with these IUL products. I think that's a big deal, right? People don't want to lose money. They want access to market indices, but they don't want the ability to lose money. So it does. These IUL products, if you haven't sold them, really do check all of the boxes when we're talking about replacing income. I want to give you a quick idea here, a real world solution. And this one hits close to home because frankly, this is my own daughter. My oldest daughter, she's actually, and her name, this is a real name. I'm not even protecting the innocent. Her name is Brittany. When I put this together, she was 25. She actually just turned 26 in March. She's moved to Des Moines. She's adulting. She's got a real job. Frankly, she's got a boyfriend. She's hoping it's serious. She's got a kind of a customer service job. She's excited to be out on her own. This company that she started to work for has a 401k program. She's reached out to me to say, hey, Dad, can you help me with some of my benefits? This is a little bit Greek to me. And of course, I'm always happy to help my daughter, but also being in this business, not as professional as all of you that actually live it, breathe it every day, but being a home office stiff, I do know enough to be dangerous. This product, this platform program, 401k program at this company offers a 2% match. And you know what? I kind of like to say, what keeps Brittany up at night? Well, she's 26 years old. Frankly, there's not much that keeps her up at night, right? So some of us, we've got a lot of concerns. The weight of the world is on our shoulders. But to be 26 again, with maybe your biggest concern is, where do you go out to dinner or what clubs you go to on Saturday night? Boy, I'd be happy to do that again. But, what are some of her needs and wants? When I sat Brittany down and said, hey, what are your needs and wants? And some of these, frankly, I had to coach her a little bit, right? But she does want to buy a house. She's hoping that this boyfriend's going to propose in the near future. There will be kids eventually. She wants a family. She doesn't want to think about investing in retirement. She's heard her dad, do some of these webinars, from the other room. She's been on some of these conventions and trips. She loves what this business has done for our family, but at the same time, she's not interested in being an expert on it. And I can understand that, right? So she wants a lot of things. She needs some other things. And so what I suggested to her is, look, if they want to give you free money with a 2% match, why would you not take that? And so after we looked at her monthly budget, how much money, disposable, whatever you want to call it, she had available to be able to invest in herself, pay herself each month, instead of putting all of that into the 401k. So instead of putting 5-6%, whatever that number was going to be for her, let's just do the 2%, because of course we don't want to leave free money on the table. So she gets the 2% match. So she's putting 2% of her salary into that 401k plan at her employer. Instead of socking that money into the 401k, the remaining amount she's willing to part with today, and I emphasize today because, again, she's 26 years old. She just started this job. Hopefully, if she works hard, as a dad always wants and prays for, she'll work hard, she'll get raises, she'll get additional responsibilities, and she'll continue to increase her income during her income producing years, right? So today she's willing to commit $300 a month. And I ran that just in the spirit of our webinar today to age 70. Again, we all hope that our children do better than that. And maybe the next year, she can increase or buy additional amounts to go alongside her growth as an individual in the workplace. But right off the bat, with that $300 a month, a healthy 26-year-old, she now has $250,000 of death benefit. Look, we don't want to think about anybody dying, but in that next bullet, let's think about, look, we don't want to think about dying, but we know we're on social media. We know people get cancer. We know people get in car wrecks or motorcycle accidents, and they can't work for an extended period of time, and they need additional work. We see the money. We see the GoFundMes. We see the chili suppers. We see the, hey, we're passing around the hat. Instead of that, she now has right off the bat the ability with the Ameritas IUL to get 25% if a critical illness happens or 50% a chronic illness. I always like to point out with Ameritas, those are real percentages. That's real money. A lot of carriers, they say, 25 or 90 or 80, but that's not real because you don't know how much they're really willing to pay you. That's just a starting number on the whiteboard. We give you guaranteed lump sum. So what Brittany can get is 25% of that 226,000. She can get 50% of that 226,000, a real guaranteed lump sum. In 7 years, she talked about, maybe needing some money for a down payment for a house. Maybe it's a new car or a newer car. Maybe it's having some money to, have a child. Now there's some cash value there. In 20 years, maybe that child wants to, to go to college. That average debt right now, depending upon what school you go to, can range from 35 to 335,000, right? But there we have some money that she can get access to. But, again, we're talking about this whole conversation today is about replacing income. And at age 70, she's going to have about $850,000 of cash value. I just ran that out for 20 years. We could do less. We could do more, of course. But that's going to give her another $78,000. Now, that's conservative, right? Because, again, that was only doing $300 a month for almost the next 50 years. I would hope if I do a good job of being a nagging parent, she's going to increase that amount as we continue to move down her journey into retirement. So this is a very least number for my standpoint. It's all about the income. When I showed Brittany that illustration and I said, look, let's take that Roth 401k, that 4%, 2% of her money, 4% of the company's money. Let's extrapolate that out. Let's use a conservative interest rate. And again, we also, just like the IUL, that's $300 a month. Her salary is going to increase, right? So these are the bare bone numbers. But when I show her she's going to have, almost 32,000, you add 78,000 with the IUL, and Social Security, let's hope it's there, right? It's going to be a coin flip for somebody in 2065. But the U.S. government is saying they're guesstimating that somebody in 2065 should have an average payout of about 25,000. So if you add all three of those together, we're talking about $136,000 and change, paid to her for 20 years, when she turns 70. So until she's 90 years old, she's getting $136,000. That's a lot of money today. We all know 65 years, or excuse me, it'd be not 20, but 40, 50 years from now, that may not be a lot of money. We all know that. But the beauty of this is a bare bones extrapolation. And so we're talking about the concepts. You can add in different numbers here and there. But at the end of the day, I'm showing my daughter by putting in this money now, you're going to have an income stream when you do want to retire. And all during that time frame, you're protected if something bad happens. You don't have to dip into your 401k. You don't have to dip into your rainy day fund. This can be that emergency situation from a health, catastrophic health situation. We hope that never happens, but if it does, we don't have to worry about it. So, the reason I utilize this example of my daughter is I'm sure a number of you on this call have individuals, whether it be daughters or sons of your current clients, or young people. Maybe your sons and daughters are my daughter's age. It's a heck of a network. Yes, we love those 55-year-olds where they're overfunding the heck out of these IULs, but don't disregard this one here. You talk about a set it and forget it. It's an easy sale. Millennials, all the studies have done, the majority of millennials are savers. They do want to save for retirement. They don't want to work forever. They will resonate with this type of program. So sometimes we go for the whales, but I'll tell you what, if you're a baseball fan, home runs are great, but boy, you hit singles and doubles, consistently, and you're going to be in the major leagues for a long, long time. So I really encourage all of you to focus. If you're thinking about now, think about those 25-year-olds. Think about those 30-year-olds. Think about, instead of putting money into a 401k, backing out a little bit of the 401k. Get the match, of course, but let's get some real protection in place. And really you can almost do it from a zero sum. The percentage they're putting in their 401k, you can extrapolate that out and see what that would do to just take that out of their checking account in regards to an IUL. And frankly, from an underwriting standpoint, most 26-year-olds are pretty darn healthy, right? They're 10 feet tall and bulletproof. And that's another reason you're going to love these, right? Because you're not going to have to worry about getting that Dear John letter from Ameritas or another carrier saying, we're sorry. This person we can't even get them to breathe into a mirror, right? So with the younger people, you're not going to get that Dear John letter too often. So I hope everybody found a few tidbits, in regards to the income story, replacing income, changing the conversation. It's not about dying, it's about living. And then more importantly, focusing on some of those younger people, focusing on, if you've got that 25, 26-year-old son or daughter, they're a good first step, and they've got a great network of friends, and you can really start to hit some singles and doubles, and frankly, then it grows into the triples and home runs because now you can talk to their parents. It really does almost reverse the lead generation system. Bill, just briefly, and I want to do the same thing, just very briefly, one slide talking about this FLX IUL. I call it my quick commercial on the FLX IUL. As I mentioned earlier, there are a lot of great products, a lot of great carriers out there. You get a lot of white noise from a lot of different individuals telling you about how great they are. I just want to tell you very briefly, 4 bullet points why I think this is one of the best index universal life products out there today. The first bullet point, I've been talking a lot about income. We actually have a lifetime income rider that's automatically added to each one of our IUL products that you sell one of your clients. I like to call it the dusty shelf rider. And what I mean by that is your client does not pay for that rider unless they use it. So it sits on a dusty shelf. When it's time to finally start getting income, you have a number of options, right? You can do the tax-free cash value loans, which a lot of people have done for years. You can do withdrawals. But another option will be, if you're familiar with like annuities, this is like annuitizing a contract. We set up a lifetime income, tax-free lifetime income stream to your client. Essentially, we look at what their account balance is. We look at their life expectancy, similar to an annuity, and we say from now on, we're going to pay you, and I'm just using, fake numbers here, we're going to pay you $1,700 a month for the rest of your life. Now, they may outlive their account balance, and if they do, they're living on house money, right? We just keep paying it tax-free till they die, and even then, we still pay a 10% residual death benefit to their beneficiary. If they happen to die prematurely and their account balance has not emptied, we're going to pay all of that remainder to their beneficiary. So it's not a situation where like a life-only annuitization where you use it or lose it, right? You get hit by a bus 1 month into it, and guess what? The house wins. Either way, the client is going to win. But it's a wonderful opportunity for your clients that are concerned about outliving their income. It's not for everyone, and that's why it's an optional rider. You don't pay for it, but it's there. It's a nice sizzle to the steak when you're having that sales presentation. Mrs. Jones, when we get to the end of the journey, we're going to have a number of options for income, including this option where they'll pay you for the rest of your life, regardless of what your balance is. In addition to that lifetime income rider, we have a Momentum 5 index. There's a number of carriers that are coming out with their own indices, and I think that's wonderful. I think the more the merrier. And we all love the S&P 500, right? I had a chance, I mentioned I've been in the business 25 years. I was with a carrier that had one of the first index annuities, and we all linked initially to just the S&P 500. It's familiar, people understand it, consumers are aware of it, they see the numbers on the nightly news, etc. What we wanted to do at Ameritas is have an index built for us that would complement the S&P 500. The S&P 500 is wonderful. It's a large cap US-based, pretty static index, right? You know, not many carriers change from year to year in the S&P 500. And if the S&P has a correction, right? There's nothing you and I can do to make it go up. We can put our hands together and hope and pray that it goes up, but at the end of the day, it's not actively managed, right? So what we wanted to do with the Momentum 5 Index is just the opposite of those three things. Instead of just being US-based, we wanted to have a global presence. Obviously, US is important, but there is money to be made all over this wonderful world of ours. We also didn't want it to just be a large cap. You know, my mom always said, don't put all your eggs in one basket, right? You've all heard that. That's kind of what we're doing with the S&P 500, right? When we're putting all our money in just a large cap fund, we're not really following that diversification 101 story. So we wanted to have, of course, this Momentum 5 Index has S&P large cap, but it also has mid cap and small cap. It also has bonds, and it also has a little bit of real estate and gold and oil. So you've got essentially the whole pie that we can choose from. Last and most importantly, not least with that Momentum 5, is that it does have the ability to be actively managed. It has daily dynamic diversification. Somebody much smarter than me is watching that index every single day. If something gets too volatile, there's a run on let's say, gold or oil goes through the roof, or more importantly, goes in the tank, we have the ability to make changes on the fly. Think of this as like a mutual fund within an index universal life where your client can never lose any money. Zero is your hero. And as Bill mentioned on the first slide when we get started, we've got a 1-year and a 2-year version. The 1-year version is 185% participation rate, no cap. The 2-year point-to-point is 250% annual point-to-point, no cap. And frankly, those are not got you rates. I know carriers in the past, they have these wonderful rates and all they do is stab you in the back 12 months later, kind of a got you rate. These are not got you rates. We have a direct deal with the Bank of Paribas, one of the largest banks in the world. They built this index for us, so we have the ability to control much better those participation rates. And frankly, those rates have never come down. Those have been the rates that we've only increased those over the last 2 years. A lot of carriers have played around a lot with their cap rates. This one doesn't have a cap, and those participation rates are rather high. Third bullet point, living benefits. I won't belabor this fact. Bill already mentioned 18 different triggers, 18 different ways to get access to your money. That's a big deal. And also what I said earlier, we do these differently. We don't underwrite at claims time. We give you a guaranteed lump sum amount that I tell you on day one, you and your client. It's easy for you to explain. It's easy for your client to understand what they'll actually get if something bad happens. Some of you have been burnt in the past with other carriers where you can accelerate 90% or 100%, and you think you're going to get 100% or 90% of that death benefit, and then they say, we'll write you a check for a third of that or a tenth of that. You're like, what is going on? That's because they did a different type of calculation. They did an acceleration, a present value calculation. We don't do that. We do it differently, and we think it's much, much simpler to understand. Last but not least about this product, versatility, flexibility. I like to say this product fits the kitchen table all the way to the boardroom. I've got people using this for high-end premium finance deals, and I still have people like myself that are using this for my daughter for $300 a month, for people that are doing it for infant policies. You know, one of my agents just had a baby last week, and they're going to write one for their newborn son. So this product works. It's very versatile and flexible from the kitchen table to the boardroom, and so that is why those 4 bullet points. I think if you haven't taken a serious look at the Ameritas FLX IUL, I really encourage you to do so. Last slide, and I'll turn it back over to Bill. It's not just about the product, right? It's also about the company behind the product. I am so proud to say I work for a 40-year-old mutual company where, frankly, it's Main Street, not Wall Street. As you know, with a mutual company, we don't care about Wall Street. There are no stockholders. We're not worried about share price. It's a 3-legged stool. We're worried about everybody on this call, your clients and us. That's it. We have a 10-year plan, a 5-year plan. We want to grow, but do it the right way. The majority of my career, I've been with stock companies. You don't know what you don't know. Being at Ameritas the last 2.5 years has been an eye-opener for me. And I really do feel like that is a little thing, but it's a big thing. A U.S.-based mutual company is something you can get behind and be proud of. The last thing I'll say is, how do they treat your policyholders? You know, we've just heard recently there's carriers that are lowering the cap rates on some of these products. We don't play the new money, old money rate game. We want to treat your customers you gave us 2 years ago just as well as the person you're going to sell tomorrow. So those are the little things I think that make a big difference. Product is very important, but also the carrier behind the product is just as important. So I'm proud to send out our renewal rate history because it's been good. You call some of your reps at other carriers, they're going to hem and haw because you know what? They don't want to send you that history because it doesn't look good. I've went on long enough. I am so excited to be able to tell you about this product and about replacing income. And Bill, thank you so much for the opportunity. I'm going to turn it back over to you.
Thank you. Thank you very much. I know we ran a little bit over, but I hope you see the value add here. And I hope you wrote down notes and nuggets, most important. So we're going to take like 5 more minutes to share. One of our biggest premium finance cases was through Ameritas on this product. We're going to show you in a minute. We're going to show you what tools and what marketing is available so you can start to drip this out to your prospects. And then we'll ask our question of the day. And I promise you, we will be finished up by 4:10 p.m. Eastern Time. Joe?
Yeah, thanks, Bill. So real quickly here, of course, we're going to send out a thank you email with everything we covered and links to all these different sections of the website so you can jump right in and grab all this material. One important thing I want to mention is we have an awesome living benefit detail section on the website. Underneath the product tab, you can see every LB carrier we have and kind of a great chart on issue ages and non-med limits and special notes on what you need to know about every single one of these products. You'll also find the Ameritas product guides, which we'll send out, and also spec sheets, underwriting guides. And then one super important item I want to mention is on this screen, underneath that living benefit tab, you'll see a Levinson living benefit video. You can actually request your own custom LB video. We have an in-house design team that will actually embed all your contact information. This video was designed to kind of explain living benefits to clients, and agents are using it to market on their YouTube channels, social media. Just a great way to kind of engage customers and explain how neat those living benefit products are. So that's something that we offer at absolutely no cost to Levinson agents. Again, that's the living benefit video. Can be fully customized with your logo, contact information, website, everything you need to be able to market that product. Also, one super important item is the IUL experience, right? We talked a lot about the IUL products, and Lance mentioned how great IUL is. We have the IUL experience, which is basically our microsite for everything IUL. So that includes case design, consumer materials, prospecting information, training videos, even the IUL sales software, where you can plug in all your clients' information and get a custom proposal and even a custom PowerPoint to present that specific product. So we'll send that link out today, just a wealth of information to help you present that IUL product. And then Bill mentioned our premium finance resources. So we have a dedicated page on the website. You'll see on the screenshot here that says premium finance. You can actually download all the materials, all the guides, all the presentation items, and even request a premium finance quote. We'll then put together a sample illustration based on a financing scenario. And just to give you an idea, if you're not too familiar with how premium finance works, we've got all sorts of training materials and actually a separate podcast and several webinars that dive into specifically how premium finance works. I want to give you a quick example. This case actually was approved, and it should be going in force within the next day or two. As a quick example of a case study for premium finance. So we've got a male 43, preferred plus non-smoker. We did a $5 million benefit, and then annual premium was about $160,000. So I just want to point out very quickly here how premium finance works in a real quick 1,000-foot overview, and then I'll send you all the additional training material to kind of look at some sample cases. So in this scenario, the client's actually taking the loan from the lender to put in $160,000 each year for 10 years. And then what you're doing is you're borrowing those premiums from that bank or that lender to then put into the policy. And in this scenario, in the 15th year, they're actually taking a distribution out of the policy to pay back the loans plus the accrued interest. And what the client's left with is an awesome scenario where they have a great cash value, a great residual death benefit, and really a paid up IUL policy that will continue to grow for the life of that client. And this illustration does go through to age 100. We've got awesome premium finance partners that put together scenarios, videos, all sorts of items. They'll even jump on a phone call with you and explain this concept to your client. So this case study is really unique because it's one that we actually just put in for us. Actually, it should, like I said, go in for us this week, probably Thursday or Friday. So awesome scenario, just a great tool. And like Bill had said, one of our larger premium finance cases in the last couple months was with Ameritas. So super excited on this case. The target was $65,000, so not a bad payday for that agent.
Okay, thank you, Joe. And like I said, we're going to be done in 1 minute. These are upcoming agent training events. Every day we have our agency automator live calls hosted by Kevin, and then in blue on the bottom, that is the new rollout continuing on with IUL Week Part 2 on Thursday. Non-med IUL up to $1 million, another big plus. On the bottom is our new $1.5 million direct-to-consumer term on the 8th of April. Okay, moving forward here, our last slide and question of the day. And there we go, perfect. And the social media contest, by the way, go to our Facebook page, like it, follow it, and you'll see the details. We'll also include it in our thank you email that everybody will receive before we leave the office today. Okay, last slide. That's our Positive Tuesday quote, which I'll save for next time or check it out on any of our social media pages. Question of the day. I hope you were jotting down notes. Whoever answers first wins. Get your little fingers on the keyboard and let's rock and roll. The question is, with Ameritas IUL, how many living benefit triggers does Ameritas have? Tell me the number. How many triggers does it take for the client to access living benefits? What's the magic number? How many living benefits triggers does Ameritas have in the IUL product? Joe, do we have a winner?
We do. Michael M. from Nevada.
Michael M. from Nevada. The answer is 18 triggers for Ameritas living benefits. That's huge. Meanwhile, hope you walked away with some great nuggets. Thank you for taking the time, and I apologize for going over. Lance got a little excited, but I know it was well worth it. I learned something, so that's always a plus. Have a great rest of your Positive Tuesday, a great week, great selling, and thank you again.